You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean only one thing. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together. It is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which so many of you are binging throughout the week. Remember, if you like what you hear, this program, anything we do throughout the week, keep those reviews, those comments coming on wherever you listen to our content. It really does help new people continue to discover the network, particularly all that horde of one-lot people who are diving into the options market afresh, anew here in 2020. They need a place to hang their hat as well. So keep those reviews, those comments coming. Keep those questions coming, too. We do love to hear from you guys. And speaking of hearing from people, we got a great panel to talk to today about all things volatility, including some returning favorites. First, let's go out once again to the land of Princeton, New Jersey. We were joined once again by our old friend, Mr. SHELLY Brown, the Executive Vice President over there at MIAX. SHELLY, welcome back to Volatility Views, sir. It has been too long.
Mark, great to be back. Thank you so much. Really appreciate it.
I hope you're excited today, sir, because it's going to be a fun show. Are you excited? You ready?
I am very excited. Been waiting to share for a long time.
Yes, this is going to be a good one. And also joining us for this day that's going to have a bit of a festive tone to it, beaming in all the way from far, far across the pond in the other direction. He gets the award for getting up the earliest. It's 5 a.m. in his neck of the woods. Our old friend, Mr. Simon Ho, the CEO of T3 Index, a.k.a. the Spike's father himself. Simon, welcome back to the program. I hope you are awake to kick off Vol View, sir.
Oh, absolutely, Mark. Anytime you get to go on the show, I'm bright and bushy-tailed. Thank you for having me.
I'm glad you can make it on. You sound much more cogent than I do at 5 a.m., sir. So well done to you. All right. And also joining us, let's see if he's cogent. Deep in the heart of Texas, we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program. Are you a cogent volatility observer at 5 a.m., sir?
Oh, my meatballs are always cogent. That's one of the things that my meatballs are famous for, is the grease and the cogency.
24/7 volatility cogency in the land of the pit. All right, with the team assembled, let's dive right on into a very special volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show we break down the week that was and still is from a vol trading and trending and unusual activity and all sorts of perspectives. And, you know, now that I think about it, that usual intro to this segment is just not going to cut it this week. We need something a little bit more festive. Let me just hold on and see what I could do here. All right, that's a little bit better. That's a little bit more festive. That's a little bit more celebratory. All right, listeners, yes, we have a good one in store for us today. In case you can't tell, Shelly's excited. Simon, even though it's 5 a.m. in his neck of the woods, he's pretty darn excited as well, because there's some big news in the land of all things volatility. Pretty much the question you guys have asked us almost week after week for the better part. It's almost been exactly a year, which is kind of terrifying. But it is true. We are at that point. Shelly, the big news has arrived. I will give you pride of place, sir, because you've been working on this diligently for the better part of the past year. What the heck am I talking about? What is the big news, sir?
We are relaunching the Spikes Futures beginning this coming Monday, December 14th on MJX, trading on the CME's Globex platform.
That is the news we have been waiting for some time. If you're a newer listener to the show, listeners, and we know a lot of you have joined in 2020, this crazy, tumultuous year. It's hard to believe that the Spikes delisting happened before all this madness, but it did. The Spikes futures were listed. We did all this celebration pretty much exactly a year ago, and then they got effectively delisted, halted for a little bit, more out of abundance of caution on your part there, Shelly. And now they're back. Maybe for our newer listeners who aren't familiar with all the goings on, give them like a quick 10,000-foot perspective of how we got to here, sir. What happened?
Sure. So the plan we launched, the Spike Options, was launched, the Spikes Futures and MJX. They were officially launched the first time on November 8th of 19. Just over 12 months ago. The contract was formally filed with the CFTC and approved for listing. Last Thanksgiving, we got a call from the SEC. There was some concern about the listing of the contract, and we voluntarily delisted the contract on that Friday after Thanksgiving, gave everyone a chance to unwind their positions. And we've been working with both commissions since, and we've come to a favorable decision. Both commissions, the CFTC and the SEC, have approved the relaunch of the product. None of the rules have changed. Everything's the way it was. Basically, vol measurement on the SPY expires on the third Wednesday, the Wednesday preceding the third Friday, 30 days prior to the following month's SPY expiration. Cash settled, $1,000 multiplier. Same way it was listed the first time, very similar to the competing VIX product from CFE.
Just how excited do you, I can see your face here, Shelly. Everyone else can't see your face, so I can see you're excited. But this has literally been pretty much a year's worth of work. I know you didn't even really get the chance to celebrate Thanksgiving last year. You're pretty much on the horn with the regulators the entire day. So this has pretty much been your 24/7 nonstop affair since this all happened last year. So just how excited are you to finally have the Spikes futures back?
Well, extremely excited. The entire firm is. We've been working towards this for a year. So from the day they called us and asked us to take it down the day before Thanksgiving a year ago to Tuesday night before Thanksgiving a couple weeks ago when we got the exemptive order from the SEC that allowed us to schedule the relisting. It's been a ton of work. It's been a lot of sleepless hours for a lot of folks, a lot of nervousness for myself and Tom Jarek and Simon and everyone else on the team. But we're very excited about the relisting. Just pick up where we left off. Like I said, we're excited about working with the team at MIAX. And for those who may not know, MIAX is now a wholly owned subsidiary of Miami International Holdings. So the same holding company that owns our 3 options exchanges and our new equity exchange, which launched in September. The same parent company now owns MIAX as well.
Yeah, I mean, we had Tom Gallagher, your CEO, on our interview show not too long ago, about a month ago, and he seemed exceedingly optimistic that it would happen before the end of the year. And as we were creeping on here with December, I was starting to wonder. I was like, oh, maybe Tom got a little excited, a little bit ahead of himself. But lo and behold, I was a fool to doubt him, Shelly, because here we are coming back here next week. So he made it in right under the wire. Simon, you are joining us. This was exciting enough to get you up before the crack of dawn there across the pond. As the creator of Spikes and having to be, partake in all this drama for the better part of the last year, how excited are you, sir, to finally have the Spikes futures back?
Look, over the moon. I mean, this is a realization of many years of work, concentrated effort on the part of not only my team, but of course, MIAX has been so integrally involved in this thing. And so, yeah, sure. It's been a shame that, it's taken this long, but we're here now and everyone's just exuberant about being able to get out there and, to showcase what we can do. It's just pure excitement and elation at this point, which is why I'm buzzing at 4:50 in the morning. It's no worries. I mean, I'd love it any day of the week. I'd get up for this. So, no, we're very pleased with how it's gone. Obviously, we would have preferred it took a day instead of a whole year, but it is what it is, and we're finally at the starting line. So, couldn't be better.
You don't need coffee. You just have the return of Spikes to energize you throughout the day, sir.
Exactly.
That's all the fuel you need. Mr. Meatball, I know you've been waiting for this day for quite some time. What are your thoughts here on the final return here of the much-awaited, much ballyhooed Spikes future, sir?
I got to say, I'm really excited. I think that's going to really catapult action in Spikes itself. You'll see those options really start to tighten up, and I think you'll see some good trading on the options. And, it opens the door to, path for the Spikes to have a whole suite of products down the line. So I think it's wonderful. And hats off to SHELLY and the MIAX crew. And, half a hat off to Simon just to give him a little bit of garbage.
The man got up at 5 a.m. Least he could do is he can get us a full hat there. All right. Let's keep rolling here on Vol Review. We had to kick it off with that celebration because it has been something everyone's been waiting for over a year now, which is crazy to say out loud, but that's how long it's been. But Shelly, I know this has been kind of your day-to-day go-to out here, but people have been paying attention. There's been a heck of a lot else going on over there at MIAX. I don't know if you guys got the memo. It's a pandemic. It's supposed to be kind of laying low and taking some time off. Instead, I don't think a day has gone by, and certainly not a week over the past couple of months where I haven't gotten a release that you guys are acquiring something or investing in something, or you have your market share numbers come out, which you kind of just broke down on the show last week, where you guys are kind of carving up the market share. What the heck's going on at MIAX? You guys are kind of just on a roll there of late. So maybe let's start on the options front, break down some of those numbers that are we kind of touched on last week. where's all that share coming from? And then B, what's going on with you guys have invested in crypto, equities, fintech? I mean, you guys are kind of firing on all cylinders, sir.
Yeah, so the options volume has been great. Obviously, this year has been an unusual year. The changes in the marketplace when the floors closed in spring really worked to our advantage in a number of ways. We saw a pretty good increase in volume up into the mid-14s, touching 15%. As the floors have reopened, we've seen that volume drift back down. We're in the 10 to 12 range, depending on the day. But we got a lot of things we're working on and a lot of interest by a lot of firms to potentially bring additional volume to us. Again, it's all about the technology and the risk protections. That's where we really shine, as well as our customer service. But what the other things we've been working on is growing the firm. We were basically, it started as a single options exchange, had ramped up to our third options exchange 2 years ago, but we were still just focused on options. And the entire goal from day one was to get into other asset classes. We opened the equity exchange, as I said, in September. That was on our plate from day one, 10 years ago, to open an equities exchange, and felt like the time was right. Of course, we opened at the same time or similar time that MIAX did, and the long-term exchange. Be interesting competition. We're still rolling out functionality, and we will grow with that market. As far as getting into other asset classes, crypto, obviously that's a relatively new topic. Last few years, we want to at least have some exposure to that marketplace. We made an investment in LedgerX, probably 2 years ago, and there's other avenues that we're looking at. We have some relationships overseas. We also bought the Bermuda Stock Exchange. We have a controlling interest in that. Gives us the opportunity to list things offshore. If you own
the Bermuda Stock Exchange, and with cannabis being legal, you should run futures on Bermuda grass.
I wouldn't know. I've never had Bermuda grass.
They just dug out of their issues with the regulators. They don't need to add a whole bunch of new ones over there.
This is very true. Although I guess that contract can go nothing but higher, right?
Right.
There we go.
But the opportunity to join the team at MJEX and have them under our umbrella and be part of our team was truly exciting. We have a lot of things in the pipeline, additional products we want to bring to the Minneapolis Grain Exchange. The fact that they use the CME Globex platform is a huge bonus. It gives us immediate exposure to all the FCMs. It's truly an exciting opportunity. That's why we chose to list Spikes futures there in the first place. And as soon as we started working with the team at MJEX on Spikes, we realized that this was a long-term opportunity for us to get into an additional asset class. And that asset class obviously also is a vertical class where we have our own clearing as well. So there's a tremendous number of opportunities for us to bring new product to MJEX, bring new products to Bermuda. I'm not on the team that's working on the crypto side, but they have a lot of things coming down the pike as well.
Yeah, certainly sounds like it. So stay tuned, listeners. If you want to see something interesting, just about every week there's a new release coming out with something nothing as big, though, as the release that came out this week, the return of this much anticipated Spikes Futures. Speaking of Spikes Futures, I got so excited at the top of the segment, I forgot to even set the table. Coming into Showtime, we had Spikes at about a 24.5. That puts it up about exactly 3 points, actually, from where it was this time last week. VIX Cash coming to Showtime also at a 24.5. A rare moment of parity there between Spikes and VIX Cash. That was up about 3 3/4 points from last show. And our old friend VVIX, a.k.a. the Vol of Vol, up quite a bit, getting frothy, getting juicy again, up to about 117, up 12 handles. That's, of course, a lot of that coming on the heels of today, seeing a bit of a red on the old screens out there. The S&P off about 0.2%. Dow off not even quite 0.25%. And the NASDAQ charging off over 0.75% to the dark side out there now. So a little bit of red on the screen that we have seen a prolonged period of green, which brings us to our poll. You guys have been playing along pretty well. Get out there. We'll talk about it later on in the show. We're asking you this kind of that question everyone has on their minds right now. Markets outside of today have been pretty much at all-time highs pretty much every session for the better part of the last few weeks. Yet volatility across all the products, VIX, spikes, VolQ, you name it, they all remain elevated. So our question for you this week, quite simply, is why? Is it pandemic fears? Is it concerns over the stimulus? Is it the valuation of the market / fears of a sell-off? Or is it something else entirely? Hit us up. Let us know. You know where to go. At Options over there on the old Twitter machine. Make your voice heard. A bunch of you are already playing along, too. We'll get to some of those results a little bit later in the show. Now let's go out to the Spikes father, Mr. Simon, sir. Obviously a lot popping off in the world of volatility since the last time we chatted here. So catch us up. What's been dominating your tape? What are your thoughts? We haven't had a chance to even talk to you since the election. What are your thoughts on how vol played out leading into and coming out of the election? And now, of course, in this week here where vol remains elevated even as markets are at all-time highs, sir. A lot to unpack there.
Yeah, there sure is. I mean, the market, it's just been extraordinary, hasn't it? Since March, when everything blew up and then you had this massive decline. And then, of course, everything rallied so strongly from there. I'm a little bit cautious, I have to say, at these levels. My bread and butter isn't to be a sort of stock analyst, but it does seem slightly over exuberant. I know that we have got vaccines are starting to be rolled out around the world, and that's obviously going to be extremely positive. Feels to me, though, a little bit like it's kind of baked in there. And I think that the fact that you've got VIX and spikes at 24 on the cash side today, it kind of just indicates that I think people are a little bit more concerned maybe than you would otherwise feel by seeing what's going on in terms of the market. The breadth of the volume has been pretty amazing, but I'm certainly cautious at this point. So, yeah, I don't think the rally has just been spectacular, stupendous even. And so I sort of a little bit cautious about what the future has to hold here. So I guess I'm more of a bearish stance at this point.
And what about how vol played out going into the election where it kind of remained firm? Then it seemed like folks were coming for it a wee bit, maybe early going into the election. Then we saw the massive rally after the election and vol coming off a bit, but now we kind of hit this level where it seems to stubbornly wants to remain in the 20s, no matter what else happens. What are your thoughts on how vol has played out over those periods there, Simon?
Yeah, so that is quite amazing. And I think that it's remarkable that we're more than 24, given what has already transpired and so on. So I guess, Donald Trump likes to keep things interesting. I think that keeps vol elevated, of course, because there's uncertainty around, how this is going to resolve itself. But from my take on it, I think that things are probably the vol is elevated, obviously. I think maybe that has a chance to come down, but I am overall kind of risk averse at this point from the stock market point of view.
Kind of hard to fault you at these levels. We'll see what our audience has to say in a little bit. Let's go back out to the heart of Texas, a.k.a. the new volatility mecca down there of Austin. Mr. Meatball, obviously a lot popping off. We're still in that rarefied air. Well, outside of today, we're selling off a little bit, but still coming into today, everything was at all-time highs, and volatility remains a little bit frothy, a little bit elevated, sir. So what is lighting up your tape this week from a vol perspective?
Yeah, that's just it, is that, if you look at the way paper has aligned itself in the VIX contract, you have to wonder whether all of this open put interest is assisting vol higher as market makers and hedgers are, dealing with some pretty decent sized open put positions and a total lack of upside exposure in calls. Since the last time you've been on, there's been a pretty dramatic shift in kind of overall market positioning. And I'm sure you've noticed this in VIX and volatility, in that we now have a situation where calls and puts are about 1-to-1 on any given trading day. You can see puts outpace calls as much as 2-to-1. It looks like we've gotten shifted a little bit where current open interest calls are actually a little over puts. But over the last 3-4 months, puts have outpaced call volume by about 1.3-to-1. So you got a market that it really trading VIX in ways that I have not seen in a long time, and some pretty strong expectations for volatility to still back off. The biggest trades that we've seen today on a day where the VIX is up 2 points are somebody bought 12,000 of the 20 puts expiring on Wednesday for 9 cents. You got the March 17s trading; those were purchased. And the Feb 19s also purchased. The December 23 puts, somebody went out and bought a chunk of those. So there's a really interesting change in how the market has positioned itself. And they keep looking for the big fade, and it keeps not coming. And I'm wondering whether the fact that everyone's looking for the fade is a little bit self-fulfilling.
Certainly seems that way. Simon, anything to add there, sir?
Yeah, I think that's pretty good insight, to be honest. I mean, if you look at that term structure, if you look at VIX Central, for example, you see that obviously the front month we're going to expire pretty soon, and so it's pretty much aligned with cash. But it's stubbornly bid there, isn't it? At 20, let's call it, say, roughly 26.5 is kind of where the bulk of the term structure lies. So, yeah, clearly people are still concerned. As you say, people keep buying the puts, but it's not going down. So. If you look at the realized volatilities, for example, if you look at, say, the last 30 days, it's only at 15, and if you look at the 10-day, it's still at 15. So there's some dichotomy here. There's something. It's going to play out one way or another. And my feeling is that, despite the fact that I'm overall sort of medium term a little bit bearish about stocks in general, I think that the vol curve is probably a tad too high.
Yeah, Simon, I would almost argue that we're in a scenario where we could see, post stimulus, and when Joe Biden actually gets in oath, a situation where the market is stagnant, maybe even down a little bit, and you've got a VIX falling. It's just so hot, and call skew in the S&P and in a lot of individual names is completely inverted. And that is really just, we're not used to seeing extended periods of calls being more expensive than puts, but we're also not used to seeing these, this just massive surge in equity volume all on calls. We are in a scenario, folks, where notional shares traded in options is outpacing the stock market. I mean, which, we're all option traders here. We used to be the laughing stock of the New York Stock Exchange. They would sit there and make fun of the Amex. They'd make fun of the SEBO. And yet here we are, and options are now the dog, and the stock market's almost the tail.
Yeah, looking at a bunch of research coming out recently. I think Bank of America was the latest to jump on this trend. They broke down call buying over the last 10 days average, and they were pointing out they haven't seen these levels pretty much since, you got to go all the way back to the dot-com go-go late 90s to see anything. It kind of maxed out right around 2000. Not even the hot and heavy days of 09, 08, 2010, all that time. Doesn't even come close to the 10-day average of the frenzy. They're calling it the greatest call buying frenzy since pretty much the dot-com bubble. So we are seeing a lot of that. I'm sure a lot of that coming on the heels of your Little John Robinhood folks over there, Mark. We're looking at what's going on out here in the old volatility space right now. You guys were just talking about it. Simon, you refer to it as stubbornly bid, I believe was your description, which is a pretty apt description. Looking at the VIX futures term structure here. Coming into showtime, we had the D future about a little more than a quarter of a point, about a third of a point premium to the cash. Obviously, that's coming in now, but it's about 1.25 points lower than it was this time last show. So D's and the cash are starting to do their convergence. And then Jan as about 1.5 points premium to cash. That's come in a bit as well. That's about 0.75 of a point lower than where it was this time last week. But as Simon kind of referred to it, beyond Jan, the lion's share of that term structure, Feb, all the way out to July is pretty much glued right around that 26.5 level, which is kind of fascinating. So the curve kind of peaks and then it just flatlines all the way through to June or July. It's like a plateau. And then it comes off hard again in August down to 25 20. So yeah, it's a weird structure, I think, to say the least. Mark, what are your thoughts here on this term structure that I called weird and that Simon referred to as stubbornly bid, sir?
Yeah, it is really odd and super flat, and they're like begging you to like short Feb and buy March, or do some pretty decent term structure trades that are out there right now. I mean, you could, this is a trade I'm legit looking at doing right now is kind of an in the money put spread on, VIX or spikes, where I can, buy an in the money put in Feb, and then sell an in the money put in March, basically recreating a future spread. And, it's a pretty interesting trade to me.
Yeah, this is one of the stranger plateau, I guess you can call it, VIX future structure, where it just kind of shoots up on both sides and it just flat lines in the middle for not just for a month or two, but a protracted period out there, which is somewhat strange. What's not strange is the resurgence of paper out there in the land of spikes. Folks aren't even waiting for the spikes futures to launch again next week. They're getting back out there slowly but surely. We're seeing the OI start to climb again. Let's break down some of the top positions. There have been some funky ones. I'd be curious to get your thoughts on this as well, Simon. Just break down the top positions of spikes options right now. We got the DEES 80 puts. Again, some interesting strike selections out there, followed by the DEES 28 calls. And then we've got new Feb opening out there. We got the Feb 30 calls. So much more relevant strikes than we have seen in the past, as well as the Feb 22s. Then we got the Feb 75 puts. Those have been out there for a little while. An interesting strike as well. And then keeping on the meaty option train, the February 11 calls. So new stuff opening, and the futures haven't even kicked off yet. So be interesting to see once we get the futures back what starts lighting it up. But Simon, I'm curious. We've been talking about this for a while. Kind of been speculating that folks are effectively trying to recreate futures exposure with these extremely deep options that are trading out there in spikes. Is that your takeaway as well, sir, about some of these really outlandishly meaty options trading out there?
Yeah, I think that's the only conclusion that one can draw, frankly. I mean, as you say, since March, we haven't seen levels like that anywhere on the board. So it's very curious. I'd like to know more about that myself, to be honest. But yeah, it's interesting you mentioned, though, that there's still activity going on in the options without the underlying. I mean, last year, before the futures unfortunately got delisted, we had a month where I think before the futures were actually even listed the first time around, I think the highest month was in the order of 150,000 contracts for a contract that had no hedge. I thought that was pretty remarkable. So it's not a surprise completely to me that someone would be doing this kind of stuff, given the history that it's had. But yeah, certainly somewhat odd.
So I am looking forward to seeing once we get the futures back, maybe some traditional, boring, old at the money option trading there, Simon. Once all this stuff comes back, because you're right, it has been interesting to watch. That's for sure. The folks persisting out there despite the lack of an underlying. Now the underlying's back. So that should be certainly fascinating to watch. Let's go out there now to VIX land. Pretty active day out there, especially considering that the ADV has been trending in the wrong direction in VIX land for a while. Remember, it was north of 600,000 not too long ago. Last show, it was about 533,000. It's down almost 100,000 from that level again, listeners. Coming into today's show, the ADV is at 438,000. So VIX has surrendered almost 200K in ADV just in the past couple of weeks. Obviously not a rock'em sock'em period out there. We'll see if today's sell-off can maybe lift that again, because as of a few minutes ago, we saw almost that much, about 362,000 contracts on the tape. So it seems like it's going to break through that ADV today. Let's get back to what Mark was talking about earlier, the somewhat aberrant paper we've been seeing going up out there in VIX options of late. If you know anything about volatility products, they are typically call heavy. That's where the action and the interest typically resides. Folks want to use them as a speculative tool to vol blowing up or a hedge, whatever you want to call it. But they usually play in the calls these days, at least out in VIX land. There aren't a heck of a lot of calls to be found. In fact, once again, in the top 10, we are down to one call in the top 10. This is a rare scenario. We don't see this too often. In fact, in the length of time we've been doing this show, outside of the last month or two where we've seen it a few times, I can't recall another time where we've actually seen it to this degree. Let's break down the top 10 out there. Only cost you $117,000 to break into the top 10 in VIX right now. It gets you to the D's 18 puts. Number 9, $1.21 of the D's 25 puts. Number 8, $126,000 of the Feb 15 puts. Number 7, $141,000 of the Feb 17 puts. I think you can see where we're going, listeners. A lot of puts. $159,000 of the D's 21 puts. A lot of the same strikes, too. $166,000 for number 5 of the March 17 puts. So 17 strike popular across the board. And number 4, our first and only call in the top 10. And it's an interesting one. It's the Jan 40s, 4-0. So kind of getting back to what we were talking about with spikes options. Not perhaps a more relevant strike, like, let's say, I don't know, 25, dare I even say 30? No, it's the 40 calls to the tune of $175,000. Number 3, $207,000 of the D's 23 puts. Now we got a little D's put strip going here, listeners, for the top here. Number 2, $208,000 of the D's 22 puts. And number 1 with a bullet out there, a pretty small bullet, though, only $302,000 of the D's 20 puts. Total of about $7.7 million total, talking about $4 million on the calls and about $3.7 million on the puts. So calls still outnumbering puts total in the OI, but ever so slightly. So this is, again, a somewhat rare scenario. Mr. Meatball, I know a lot's been popping off there this week. It's been a lot of puts. Anything catching your eye of note this week, sir, in VIX options?
Yeah, like I said, just tons and tons of December put volume. Lots of people making bets that there's going to be a big fade. You have to wonder whether we're priced for, if Congress gets their act together over the weekend, whether we're priced for a potential collapse in the VIX. The market is definitely positioned for that. Spikes too. And that's kind of what I'm looking at. None of the kind of the traditional complex trades that we're used to seeing. It's all kind of outright call and put buying. So more of the same.
Yeah, not a lot of nuance these days. It's kind of just loading up wherever you can, apparently. Let's go to today. Like I said, 362,000 contracts on the tape. So not a bad day, comparatively speaking, compared to what we've seen of late. The big contract today out there are the D's 20 puts, 35,000 of those on the tape, followed by 25,000 of the D's 23 puts, 17K of the Jan 30 calls. So there's a call to be found in the top 5 there. 14,000 of the Jan 22 puts, and then almost 14,000 of the Jan 25 calls. So 2 of the top 5 most active contracts today are calls, but not enough to budge the OI substantially. Yesterday, we had about a randomly average ADV kind of day, about 440,000 contracts on the tape. The big contract yesterday was a call, though. It was the March 50 calls to the tune of 56,500. So a lot of interest out there, followed by number 2, the D's 40 calls, about 27,000 of those bad boys as well, followed by number 3, D's 21 puts, 24,000. Number 4, Jan 20 puts, 18,000. And number 5, the D's 16 puts for about 16,000. Wednesday, similar paper, 484,000. Once again, though, a lot of that located and focused in one contract. The D's 21 puts doing 67,000 of that 484,000. So a lot of paper up there, followed by the D's 23 puts, 43,000. The D's 20 puts, 28,000. The D's 20 calls. So a little bit of action on the call side, 21,000. And rounding out the top 5 here, we've got the March 20 puts with about 20,000 almost exactly. Tuesday, a pretty light day, only 290,000 contracts on the tape. The most active contract, about 26,000 of the D's 21 puts. And you kind of know the drill. The D's 22 puts, D's 20 puts, 15,000, all the way down to the March 85 calls from number 4. That's kind of interesting. 12, almost 13,000 of those, followed by the Jan 65s with about 12,000 on the tape. So there are some calls fighting their way there into the top 10. And interesting strikes, nonetheless. And Monday, another light day, 299,000 contracts on the tape. Yet again, lion's share of the paper focused in one put strike, 61,500 of the D's 19 puts, followed by about 21K of the D's 25 calls, and 21,000 as well of the Jan 22 puts. Then we got 16,000 of the Jan 50 calls, interesting strikes on the call side. And then 12,000 of the D's 23 calls rounding out the top 5 here on Monday. Simon, seems like, as Mark and I were just discussing, a lot of pretty much gobbling up calls or gobbling up puts to the most part, paper out there. Anything striking your fancy out there in VIX options land outside of just the extremely aberrant nature of looking at the OI right now? It's almost all puts all the time. So anything else striking your fancy out there?
No, I mean, this is bizarre. It's very rare that we see a situation that looks like this, frankly. I'm curious, earlier you mentioned, the call buying that was just so pervasive pretty much across the market. Is this sort of a legacy, do you think, guys, of, the whale transactions that came through earlier in the year from a Japanese source? Is that having some sort of impact on this, do you think?
That's a good question, actually. That's funny. We haven't usually, when we start seeing those upside strikes, and we start seeing those questions come back in from our audience of like, hey, is the whale back? Is the whale back? We haven't really gotten those questions, which is, again, another sign of, I think, where we are in the VIX options lifespan. Maybe it hasn't reset enough yet to make it interesting. I know, Mark, you've been watching these levels for a while, kind of waiting for, what we've termed here on the show before, that reset level where VIX has come off enough where it is attractive for guys like our old friend, the whale at 50 Cent, to come back in and start gobbling up. You think some of this paper is him, sir?
Yeah, I mean, probably not. Probably not. I can tell you this much, that the Chicago Board Options Exchange is, Ed Tilley's in his office actively rooting for the VIX to fall so that hedgers will step back in. The way I had a discussion with a client the other day. I was just basically saying there's kind of two traders that really use VIX, right, and spikes. One group is the hedgers, and one group is kind of the hedge funds and the active managers. The active managers are generally trying to, the guys like Simon that are strategically trying to be short, strategically trying to trade term structure, trying to do things like that. And then the hedgers are actively in there, buying calls, buying futures, doing things like that. Well, the hedgers are gone, all right? So all you have are the faders, the term structure traders that are kind of natural traders of the volatility contract. And so one of the reasons why put volume stayed pretty consistent with where it always traded, but call volume has fallen off so much, is that you've got an entire group of natural traders in the VIX product and the SPX and the spikes product that just aren't active right now. And so, when I look at the average daily volume of the VIX, right, it's about 450,000 contracts. Prior to this whole blow up and through the average volume was about 600,000, 650 was more what you'd expect. And, what on a ratio of maybe 1.5 calls to puts. Well, the put volume stayed pretty consistent. It's the call volume that's disappeared. And so, what we're seeing is that there's nobody interested in upside call volume. Now, when you're talking about individual equities, what I think that is really being driven by is Robinhood and Gatsby and Doe and all of the individual option traders that are in there that are buying individual calls. So, Simon, here's something that's going to blow your mind. 10% of all transactions are one lots. So what's happened is when you brought up a whale, the retail trader has become a whale. And that's something that I don't think any of us could ever fathom 5 years ago. But the retail trader, the Robinhood trader, the individual option trader is now a whale, because one lot orders are creating 10% of this market, and they're piling into the same names. So that creates what you're seeing on all this upside call. It is a whale, but it's not the Japanese whale. It's the young millennial or Gen Z whale that is, sitting at home, driving an Uber and buying, or delivering my DoorDash and buying calls. I literally just got a text from a guy that was in my Second City class. I took some Second City, IO theater classes because I wanted to get better at like doing media. I wanted to be even better on the Options Insider Radio. So I took some Second City classes to get better at that. And a guy from that class just texted me asking me about what I thought about Airbnb. And that kind of, I think, puts us in the market that you're currently seeing.
There we go. It's the Second City indicator. I've quoted it many times here on the air. When Second City folks care about options, we've reached perhaps a tipping point. I know this is an area of fascination for you, Shelly, as well. The rise of, as Mark calls it, the retail one-lot traders, sir. Or what are your thoughts on this as you guys at MIAX continue to grow? Are you seeing the one-lot explosion over there, sir?
You got to be careful about one lots and assuming it's all one lot customer orders. It all depends on the exchange it's being executed on. If a 5 lot comes into a pro rata exchange and there's 5 or more market makers on the quote, and assuming it's not directed to the specialist where he gets the whole 5 lot, you're going to see that print as 5 1 lots on the tape. So when you see trades in the tape of a given size, that does not necessarily mean that was the size of the originating order. So you really have to discount what you're seeing with the 1 lots based on how many market makers are on the quote. Now, if you go to a price time exchange and you see 1 lots, then you know those were 1 lot orders or there was a 1 lot resting on the book. But again, in a pro rata exchange, a 10 lot can come in and trade as 10 1 lots if there's 10 market makers on the quote. So you can't read into the trade tape. I'm not at a point that I'm willing to share the exchange's stats on 1 lot orders as opposed to 1 lot trades, but the tape does not necessarily give you the whole story. Just want to throw that out there.
No, that's 100% true.
Complicated nature of execution in the options world these days. Pro rata, price, time, priority. We could spend the rest of the show on that stuff, Shelly. I think we'd terrify people if we dove too deeply into those nuances. But that is a good point. We talked about that before. Are these 1 lots, even on our election night special, when Henry brought up the 1 lots in SPX, are those retail or are those some algos that have figured out, or perhaps is it the way the order is being executed? So there is a lot of nuance and analysis still to be done. But nevertheless, the 1 lots persist. Is it you? Are you the listeners out there driving the 1 lots? Hit us up. Let us know. Let's go out really quickly to the product you guys love to fade before we get to some of your questions here. That's, of course, our old friend VXX. Not so much with the fade this week. It's about 18 and a quarter. It has come off a little bit. It was up about 18 and a half at the start of the show. So it's given up a quarter of a point or so. Still up about 1 1/4 points from last week. So again, not quite the fade machine it has been of late. Decent paper on the tape out there today, about 202,000 contracts. The ADV is about 175. So that has ticked down about 30-odd thousand contracts since our last show. But given today's paper, probably going to turn in the other direction. The most active contract out there today, about 11,000 of the Ds, 19 calls. And those are going away next week. So those are traditional Ds, not the weeklies of today. However, the Ds 18s going out today are doing some paper as well, to the tune of 9,000 of the calls and about 8,000 of the puts. Let's look really quickly. Let's go to a quick top 5 here. What's hot out here in all things VXX in terms of the top open sizable positions. Number 5, 24,000 of the Ds, 16 puts. Number 3, 25,000 of the Ds, 15 puts. Number 4, 29, almost 30, tick under 30,000 of the Jan, 18 puts. Number 2, 29,000 as well. So just a tick under as well of the 30,000 of the Jan, 25 calls. And number 1 out there with the bullet, 61, almost 62,000 of the Jan, 15 puts. In terms of top 10, it's about 60-40 puts to call. So puts still dominating it, but more calls starting to fight their way into the top 10. You guys don't have to fight when it comes to getting on this show, though, because it is time to check your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Like I mentioned at the top of the show, we're going to get to your thoughts on our question of the week here. We have a poll out there right now saying effectively the question a lot of you guys have been asking us, putting it back on you, saying markets are pretty much at all-time highs, today's sell-off notwithstanding, yet pretty much all the vol products, your VIX, your spikes, your vol Qs, pick your poison out there, they all remain elevated. So quite simply, why do you think that is? And we gave you 4 choices. You can also send in your own thoughts. We said, is it the pandemic concerns? Is it stimulus concerns? Is it maybe concerns about the valuation and a potential sell-off looming? Or is there something else afoot out here? Let's go out to the Spikes father first. Mr. Simon, if you have a vote in our poll in terms of why you think what's keeping this elevated, it could be an other. If it's an other, hit us. We'd love to hear it. And then B, more importantly, what do you think our audience is voting for, sir?
My impression is that volatility has room to come down. That's my honest opinion. I think that given the backdrop of what we've experienced recently, or even the last 6 months, it feels to me as though there's an excess premium built in there, but maybe it's still sort of lingering from the period where you had lots of anarchy in the market. But yeah, I think for the time being, the term structure is too high.
So why do you think it is? Why do you think people are keeping it elevated right now, sir? Is it one of our suggestions, or do you have something else of your own?
No, I'm. It's just a gut feeling at this point. It just feels to me like, given what happened to us this year from a market point of view, from March, as well as just life in general, I think there's an overabundance of caution, and so maybe there's a premium built in there that otherwise wouldn't be. And
what do you think our audience is choosing, sir? What do you think they're leaning? Get into the brain of the one-lot guy out there.
Yeah, well, given what we've just talked about, I think maybe they're. It seems like most of the action that you read out over the course of the show is put buying. So I think maybe some people agree with it.
Shelly, same question for you, sir. If you have a vote on what you think is keeping vol elevated right now, have at it. And then B, more importantly, sir, what do you think our audience is voting for?
Well, I think that in reality, measuring volatility is a way of measuring supply and demand in options. And there's more demand and less supply right now because there's uncertainty in the marketplace. Even though we're at all-time highs, we don't know where the second wave of the pandemic is going to go. We don't know long-term how viable the vaccines are. We don't know if this push by the Trump administration to have the election reexamined and the several of the swing states be recounted. All those together bring in a tremendous level of uncertainty in the marketplace. So when there's uncertainty, people buy options to protect their risk, whether it be buying calls or buying puts. And a few people have asked about why does buying calls impact volatility? And you have to remember, when it comes to hedging, calls are puts and puts are calls. When you're buying calls from a market maker and he's hedging and he's buying stock to hedge that position, he's turning those into synthetic short puts, and he needs to hedge that exposure as well. So there's a lot of dynamics that are playing in here, but I think most of it is evolving around the uncertainty. Are we going to hold these highs? Are we going to new highs? What will happen if the pandemic continues on? There's just a tremendous amount of uncertainty.
So I'll put you down in the valuation / sell-off fears category. Mr. Meatball, same question for you, sir. Which of these do you think is keeping things elevated, or do you have a fourth choice? Have at it. And then B, more importantly, what do you think our audience is voting for?
Yeah, I think it's a combination of stimulus and election fears. And then, as Simon said, it's a little bit of recency bias that is holding us up. So I'm in the, if I had to pick, I guess I would say stimulus.
So one vote for stimulus. Shelly's in the sell-off fears, and Simon's got all of the above there under his rubric. And let's see, it's actually surprisingly contentious out there right now. As coming into the end of the show, we're seeing stimulus concerns ever so slightly edging it out with 43.2% of the vote, followed by valuation / sell-off fears at about 37.8%. Pandemic fears only getting about 16%, 16.2%, and about 3% of you saying it's other, with some other interesting reasons. We'll have to get into all that when the poll expires. You know where to go. Add options on the old Twitters. You got a day or two to get out there after the show. I like to make it so the podcast folks can play along too, not just the live folks. So you got a day or two out there to make your voices heard. Let's look really quickly. Shelly, since you're on here again, we touched on this on the top of the show. We got this question from Angle 786. They want to know, what was the reason behind the continued delay of Spike's futures? Like I said, we touched on this at the top of the show. There's a lot of minutia involved in that. But if you have anything else you want to add or share here for Angle or anything else about what was going on for the delay, have at it, sir.
It was really just working with the regulators. Their primary goal is to protect the public interest, and there were some questions in their mind about the construct of the contract, and that's all been resolved. And the SEC and the CFTC are both in favor of the contract being relisted. But when you're dealing with the agencies, they're very careful in how they do things. They don't want to make a mistake, and they certainly don't want to make the same mistake twice. But everyone's now in agreement. This was a viable contract. It's the right thing to do to bring it back to marketplace. Everything about the contract itself is sound, and the market wants competition.
There you go. And we want some prognostication. I know you guys do too. So without further ado, it is time to roll out the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, you know what time it is. Time to break down the land of vol prognostication. It's an interesting one. Let's see, coming into the end of the show, we're seeing VIX cash at about a 23 3/4, and the old spikes. Where's my spikes? There it is, 23.66 out there. Last week, let's see, we had myself and the Rock Lobster and Henry, Mr. Schwartz, the flow master, on the show last week. And we had a kind of interesting range of prognostications. Henry was actually on the highest at 22.5. So looks like he'll get the winner bell, even though technically you have to be within a point in our usual scale. So he's not really within. No one's really within a point. Andrew was on the dark side once again at 20.5, and I was in the middle at 21.25. So we're all feeling a little bit more fade out there, but not a ton. Looks like Henry technically gets it, but no one really wins. We had some listeners chiming in as well with their prognostications in the teens, the high teens, 1989 and others. Didn't quite get there. We're threatening it, but didn't quite make it out there, which of course raises the most important question of where will we be at this time next week? And since we have no real winner, the closest was our guest. I will give our guest, Mr. Simon, his reward for getting up so early. He gets to go first. Mr. Simon, what are you feeling this time next week for spikes and or VIX, sir?
Okay, so given my comments earlier, historical vol over the last 20 days is 12.64. I also felt and reiterated that I think that the curve is stubbornly bid, so I have to go with that, and I'm going to say 20.
20 even. Interesting. Spike. So not going to quite break into the teens, but going to get pretty darn close to. That's an interesting prognostication. Interesting. All right, I was probably the next closest, so I will go next, even though I use close in air quotes because I was a couple of handles away. So that ain't going to cut it in my book. But yeah, this looks like, I don't know if I'm feeling the 20. I could see the logic behind why we might think that. But again, logic has defied us many times over the course of the year that has been 2020. So why embrace logic now? What's the fun in that? So yeah, coming in, and we're at about 23 3/4 out there across both of the products. I'm going to say a little bit less as well, but not quite as, I kind of like actually a little bit north of where I was this time last week. So I was at 21 1/4 last time. I'm going to say we're going to come off 2 points pretty much. I'm going to say 21. Actually, a little more, 2.2 points. I'm going to say we're going to be at 21.55 this time next week. All right, Mr. Meatball, there's a market for you. Simon's down the dark side at 20. I'm at 21.55. Are you going to cut in the middle? Are you going to get into the teens? What are you feeling, sir?
Yeah, I'm thinking that it kind of depends on what happens this weekend, right? Are we going to get a deal or not, or early next week? And if we do, I think Simon might be too high. All right. So I am going to go out on a limb. All right. I'm going to go out on a limb and I'm going to say 18-18.
Wow.
Oh, that's true. There is that stimulus juice hanging out there. And if that gets done, according to our audience, that's the biggest concern. So if that gets done, yeah, Simon could indeed be too high. I'm wagering on a little bit of gridlock preserving us through this time next week. All right, that's our market, listeners. A surprisingly broad one. 18-18 on the dark side with Mr. Meatball. 20 even for the Spikes father and myself at a 21.55. All right. Unfortunately, that music means we've come to the end of this extra special celebratory edition of Volatility Views. If you missed the top of the show for some reason, hey, yeah, Spikes Futures, they're back. Coming this Monday. A big moment out there for everybody over there on the Spikes team. Shelly, if folks are intrigued, they want to learn more about these much delayed, much anticipated Spikes Futures, and indeed all things Spikes, where should they go? What should they do, sir?
Go to MIAXoptions.com and click on Spikes. We have a newly updated website, and everything you ever want to know about Spikes is there on the website, MIAXoptions.com.
There you go, MIAXoptions.com/Spikes. The URL is the same. The website's all new. Check it out for yourself. I'm looking at it right now, listeners. Nice, snazzy new setup. Got a cool video still at the top there. All the data you want. The press releases. I've been talking about this press release for a long time. It's finally here. It's there. I can see it in the press releases section, as well as a link to a cool little show called Volatility Views. What more could you ask for from a volatility destination? MIAXoptions.com/Spikes. And Simon, same question for you, sir. Folks, if folks want to reach out, maybe they have questions about Spikes and what's going up out there, or some of the historical data. Maybe they want to know more about T3. Where should they go? What should they do, sir?
Well, you can go to t3index.com and people should feel free to contact me if they've got any questions.
There you go. T3index.com is the place to go for Spikes. He's also got some other cool stuff. BitVol. A lot of vol going on out there in the crypto space. I'll have to get you back on the crypto show, Simon. A little bit of vol to be found out there of late. Would you agree?
Absolutely. Yeah, there's a lot of interesting things going on in that space. So, yeah. Would love to.
There you go. Check them out in the meantime over there. T3 Index is the place to go. And, of course, you know where to go to find out more about what the folks at Matrix are cooking up. It's just matrixexecutions.com is the place to go to kick the tires and light the fires over there. Everything they're working on the tech front, on the execution front, color, all that good stuff, and a whole bunch more. Matrixexecutions.com. And last but certainly not least, Mr. Meatball, sir, if folks are intrigued, they want to talk to you about One Lots and the Little John, or maybe about all things volatility. Where should they go? What should they do?
Yeah, we put out great content every day covering Spikes, VIX, the whole 9 yards. Go to optionpit.com and sign up for our newsletters, and you will not be sad.
There you go. Optionpit.com is the place to go. And on behalf of Shelly and everybody over there at MIAX, and Simon, everybody over there in T3 land, and everybody over in Matrix land, and of course the Greases and Meatball, and even the Rock Lobster. He's kind of under the weather today. Feel better, sir. And indeed myself. I want to thank all of you out there for downloading, streaming, subscribing, listening live, voting in our poll. We'll see you back here next week for another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com. matrixexecutions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.